So you know how we do it. First, we'll go to uh, the economic calendar. So on our website, www.godocm.com. That's our website. So you go to our website, you go to research, and from there move on to economic calendar, and it shows you the economic calendar. So it's always good, you know, to have your economic calendar by your side ahead of the markets, right? So you don't, in terms of data, what is coming out, so you don't maybe see surprises that's going to be like, what happened? What happened to my trade? So it was always good to have the economic calendar by your side. And here on our website is very much available, well detailed, okay, and not confusing, so you can see it very straightforward. So in our webinar, we majorly focus on the 8 major currencies because these are the most liquid instruments or assets, and most traders are trading this instrument. That's why we focus more on this instrument. But in case anybody has any instrument you want us to look at, want us to discuss on, you know, always leave it on the comment section when you go to our YouTube channel. All right, and I'm going to be adding it, in our next webinar. Okay, so go to our webinar, subscribe, share it to traders. I want to see you comment there. Okay, so comment the instruments, either 1, 2 instruments you want us to add in our next webinar. So I will pick the instrument based on how many people, maybe if let's say there are 10 people said, okay, add gold, and 3 people said add oil, I'm going to be adding gold. But if 10 people said add crude oil, or 3 people said add gold, I'm going to be, adding crude oil. So just that way. Okay. So if we go to economic calendar from Monday to 3rd February, we are looking for, high impact economic data, that could, affect the financial markets, and currency pairs that could, or currencies that could be affected. One, you can see here 6:30 p.m. Nigerian time. The ECB President Lagarde is going to be speaking. Okay, so please, or you can mute yourself. Okay, please, it doesn't affect the session. Please, okay, mute yourself. So 24th February, we'll have the Bank of England Governor Andrew Bailey is also going to be speaking. It's very important. All right, these individuals, are important when it comes to the financial market. The central bank governors, when they make speeches, statements, it carries a whole lot of weight. It moves the market. So it's really, really important for you to be aware of it. Please, Ms. Elizabeth, can you please mute yourself?
Okay, no worries.
Please, you can mute yourself. Ms. Elizabeth, please, you can mute yourself. So, let's continue. So, 25th February, Wednesday. Okay, people are, commenting the pairs. Okay, NZUS, USD card. All right. Yeah, no problem. I'm going to do that, but I want you to go to our YouTube channel later. Comment this on, the comment section on our YouTube handle where this is going to be posted. Okay, you can do that this weekend because the video is usually posted on Monday. So you can do that this weekend in our old video. So I want you to leave comments there, like, share, to more traders. Okay, so leave these comments on the old videos, on this page. So that's what I want you guys to do. Okay. So on that same Wednesday, on the 25th of February, we're going to be having the CPI data, for the Euro area. Okay. And from what I told you guys, there's a whole lot of noise when it comes to the financial markets, that a whole lot of traders don't even understand what actually moves the financial markets. When you say fundamentals, macroeconomics, it's as if it's something that is very difficult. but it's not. It's just when you go to financial websites and maybe you are watching TV stations like Bloomberg, CNBC, it becomes a whole lot of confusing because of the big financial jargons there. You go to open your economic calendar, a whole lot of data. All of them are important, but it's always good to focus on the most important ones, which I'm going to always be mentioning, in all our webinars. It's really important because new people can always join our webinars, which I know. So the most important data you need to focus on is labor market data and inflation data. Ask yourself, why is it that using the US economic data as an example, when other data are released, you often see huge volatility either with NFP or with CPI. Ask yourself that question. It's simply because these are, what we call the dual mandates of the Federal Reserve. So every central bank has their mandates, all right, what they want to achieve with monetary policy. When we say monetary policy mean, if they want to increase rates or if they want to cut rates. Okay. So this is what, every trader should focus on because professionals are actually focusing on these two data. Okay. So okay, somebody said, what's the YouTube handle, sir? So please, Dr. Luke, you can leave our YouTube handle on the chat box, or Mr. Elizabeth, if you are there, so you can leave it on the chat box. Somebody is asking the YouTube handle. So, and please, you focus on the chat box so that you can reply any message, okay? So that it doesn't, distract my flow. So thank you. Okay, so like I was saying, these are two important data because central banks are focusing on these two data. These are actually what moves the market 60 to 70% of the time. So the fact is not just looking at NFP or CPI numbers, in isolation, just looking at those numbers. No, you look at data that forecast NFP and CPI, which I gave an illustration, in my previous webinars we have been doing. And one of those illustrations is, for example, if inflation is going to rise, and what is inflation? Can anybody tell me? If you can unmute yourself and tell me in a layman language, can you don't just notify, can you just, explain to me in a layman language what is inflation? Use a very simple example. Can anybody here try?
Yeah, inflation is increase in price of a particular commodity based on the previous market price.
Yeah, yeah, you are correct. But I want somebody to give me a layman, explain. Like, let's assume you want to explain to, a grandpa in the village what inflation is. If you give this kind of explanation, which is correct, he's not going to understand. So, can anybody do that to break it down to, the simplest form? Okay.
Okay,
Okay, somebody wants to
that's
answer.
the
Okay,
cost of,
Kasim.
yes, yeah, the cost of buying tomato have
Okay.
increased in price.
Okay, wonderful, wonderful, good. So let me, elaborate that. Wonderful. Please, give him a thumbs up in the chat box. Okay, give him
Can
a
I,
thumbs up. So he did really well. Okay, somebody wants to answer again. Benjamin.
can I,
Yeah, you can. You can, Benjamin.
yeah, okay. I mean, if you ask me to explain what inflation is to maybe my grandmother who probably does not have any idea of how economics work or any of such equivalent, I'll probably say inflation I'll probably say to her, inflation is when um, you can no longer buy the Maggi used to buy 10 naira, you can no longer buy it with 10 naira. It has gone up. And the money I'll probably say the Maggi used to buy 10 naira has gone up in price. And the money you used to earn can no longer. When the value of your money is so difficult to explain, it's when the value of your money has dropped, but the price of products or goods has probably gone up. That's
Yeah,
the grammar.
exactly. Everybody here has an idea. It's so simple. We can use an example. You used to buy a loaf of bread. Mama or papa used to buy a loaf of bread for 1,000 naira. Mama goes next week to go and buy bread for his or her family. And now the baker is telling mama or papa that the loaf of bread is now 1,500. And mama is shouting, and what mama earns in a day is 1,000. And mama's family feeds on a loaf of bread for just 1,000 naira. So that is inflation. The price of that particular commodity, which is bread, has increased in price. And it's usually, very bad if income stays the same. Okay? If employment, labor market is not growing at the same pace and is going bad, this is something, central banks or economies don't want their economy to be in what we call stagflation. Okay, which is very, very bad. So, in a nutshell, what am I trying to say? The most important, data sets that move the market is inflation data and labor market data, because this is the mandate of the central bank. The most important of them is inflation, followed by labor market data. Okay, so that is it. So that's why I mentioned that, because of coming across CPI here that we have on Wednesday from the Eurozone. So it's a very good one to keep an eye on. Okay. So we continue, and on 26 February, being Thursday, do we have any? Okay. ECB President Lagarde is also going to be speaking. Christine Lagarde, the president of the European Central Bank, is going to be speaking again. So it's always good to also listen to these presidents, because they give you what we call forward guidance. So please pay attention to this fundamental part for you to understand it. I know anytime we talk of fundamentals, some people may begin to sleep. It's not but because we are not heading to the charts. But if you can be patient with yourself, the chart will begin to make more sense to you. If you have been following our webinar, you will agree with me that the chart makes more sense when we come and have our fundamental bias. And you will see them that from our previous webinar, that 60, 70, 80% of the time, they have been playing out. That is the power of fundamentals. If you have not been following our webinar, please go and watch our previous videos. Look at the chart and you will see exactly what I'm telling you. Okay? 70% of the time, 80% of the analysis we are done are playing out. Okay? And that is all you need, high accuracy. Okay? So it's very important for you to understand, fundamentals, because this is what drives the financial market. They are the fuel of the financial market. Okay, so now we're still on Thursday, and now to 7th February on Friday, we have Tokyo CPI, which is from Japan. Now the inflation data coming from Japan. Very important one to keep an eye on. Okay. And these are the major high impact events we have. Also, you can also pay attention to unemployment rate coming from Germany. Germany has the biggest economies in Europe, so it's always good as well to keep track of data that is coming here, the unemployment data and also their CPI data. So PPI data coming from the United States on Friday, very important one. PPI data predicts CPI. It's a leading economic indicator. I actually use that a lot. I love PPI data because even if you are not coming from a financial background in your from the tertiary institution, normal secondary school economics, if you did that in secondary school, will tell you that before the high cost comes to the consumer, it comes to the producer first. If there is increase in price in commodity, okay, for example, somebody who is producing bread, the bakery, if flour is expensive, he's not going to say, oh, let me pity for this woman and her family that is hungry and sell this bread for a bread that is 1,000 at 500. The company, the bakery will fold. He or she will run out of business. So what he's going to do to also survive is that he's going to do what? Add that cost, in terms of the increase in price of that flour, to the cost of the bread. So it's left for the consumer to say, he will now add his or her own money to buy bread. Okay, so that is what we are trying to say here, PPI. So PPI gives you an early information about inflation. All right, it gives you an early information about inflation. So PPI data from the United States coming out on Friday by 2:30 p.m. Nigerian time. And that is all we have with the economic calendar. Okay. So let's move on to our macro scorecard watch list and see what we have. So still remains unchanged from last week. Not so much data, came out last week, so nothing much was affected. So you know how I do this? I usually take, pair the first three currency against the last three currencies. So the first three are usually, the currencies that I'm bullish on, and the last three currencies are usually the currencies that I am bearish on. Okay. And the order, if I've been following our webinar, how we do that. First of all, pair, the first currency against the last one, followed by the first against the second to the last, and the first against the third to the last. And after that, we have to also look at, sentiment. What are institutions doing? Okay. In terms of the COT data, you can see how I tabulated it here. These are just simple, data analysis or into econometric, something anybody can do. You mustn't be a financial expert and all of that. Okay. So if you look at the first one we have, which is now Swiss against NZD. So meaning NZD Swiss. So now if we look at what are institutions doing in terms of NZD Swiss. So for NZD Swiss as of last week was positive 1.85. Before then it was 23. So you can see it going down 1.85 and now negative 10. So what it simply means that institutions are selling NZD Swiss, and that's exactly what we have in terms of our macro. Okay, so we are using sentimental analysis to also align with our fundamental or macroeconomic analysis. If you come to trade and you are reading types of analysis, some traders will tell you, I don't listen to fundamentals and sentiment. They don't just know what it is. They don't just know how to use it. They always like that technical aspect because they can easily come to the chart and just identify patterns, okay, and begin to take trades and all of that. But a good or professional trader will find a way or learn how to marry these three sets of analysis because they are important: fundamentals, technicals, and sentiment. So when you use your fundamentals to understand the bias and also sentiment to also solidify that your bias, then your technicals is just and only for timing. Okay, to now confirm that your bias into that same direction, it's just for timing. Because when you look at the chart can always give you a bullish setup or a bearish setup. Okay, but when you have your fundamental bias, you now know where the flow of the currency is going. If you look at, for example, AUD and NZD, I called this particular pair out last week. If you look at AUD and NZD, chart, for example, it's been very bullish to the upside. You can see this is pure fundamentals. So, but when you look at the chart, there are sell setups to the downside, but look at the trend. Pure bullish, and that is what fundamentals actually helps you to do. Okay, so NZD Swiss, the fourth one we have here. So you can see price has been pushing to the downside since last week. So what are we looking for on NZD Swiss? I told you guys, any corrective structures of last week we are pushing down. So I'm still biased to the downside as well. So we could push up, correction up, downside again to take away this lows. Okay, that is what I'm looking at for on NZD Swiss. So the next one we have on our watch list is so Swiss and US. So meaning USD Swiss. So USD Swiss has been given some kind of pullback for almost more than 1 week now. That's been giving us pullback, and what we're expecting is a push to the downside. So maybe some of you may not understand that I have a different technical concept I use, which is very powerful in my own opinion. So I see waves and structures differently. What some of you see as impulse, or rather correction, is not what correction really is. Okay, and this is how price moves on the chart. Let me just give that little technical explanation. So when we get a push to the upside like this, so some people, begin to, think that the first move here is a correction. No, this is not correction. This is a pullback. Correction is meant to take time than the first initial impulse. Meaning, if we have a push to the upside and we get a pullback like this is not a correction, but rather part of the correction. Because corrective structures are minimum 3 waves. So meaning we get something like this downside, that is 1, 2, 3, and then we can push up for this up. This is basically the basic concept of move analysis. And if you look at it on the chart, that is how price moves in any asset you are looking at. Look at it, what we mean here. Here in USDCF, we got up, down. Okay. Now we got the 3-wave structure correction. For this down, we got this down, and for this up, we got this up. This entire structure is completed. And after that, we headed to the downside. This is exactly how price moves. So you can look at it in any time frame, any currency you want to look at, and all of that. This is how price moves. Okay. So for USDCF, what are we expecting? So here on the 4-hour time frame, price has given us a sharp up and then down. Price here is moving correctively. So whenever this corrective structure is done here, we're expected to get one more push up, breaking above this high, then downside again. So potentially we may break this low, we may not. Okay, so regardless of what happened, what I'm looking for on USDCF is a push to the downside. So we didn't look at what institutions are doing. What are they doing actually with USD Swiss? So for USD Swiss, we can see USD Swiss at +4, and now with this current week is at just 0. So there is a decline. So please, Christian, mute yourself, please, so you don't distract us. Thank you. Thank you very much. So USDCF, we can see from 15 to 4 to 0. So it's showing us that we are gradually declining. And look at the trend, because Swiss has been very strong compared to the dollar. So it's showing us that so this is just, you can see how the up move here is not strong, it's just very weak. And you can see, so that is telling us that it's this trend is actually, this little up move here is actually fading. Okay, the real direction to go for is to the downside. Okay, just look at the strength of these candles to the downside. Look at the strength of this candle when it's pushing down. Look at the strength. It tells you where the fundamental bias is to. But when it's pushing up, you can see it's just a correction. Very slow and weak. But look at the strength of the red candles. Very strong. It tells you where the liquidity and flow of money is heading to. Okay. So the next one we have here, Swiss and card. So meaning card Swiss. So what do we have on in terms of sentiment? So card Swiss, we're also seeing that decline from 20, we went to 17, and from 17 now we are to 10. So still on the positive side, but we can see there is a decline in what institutions are doing, institutional activity. So let's go to card Swiss. So card Swiss, I called it out last week. So we're also paying attention to card Swiss and seeing the latest development in card Swiss. So for card Swiss, I'm also looking at an opportunity to the downside. Okay, a corrective structure, up move, downside again. Okay, that's what I'm looking at for in card Swiss. A corrective structure, something similar to what has happened there, upside, and then I'm going to be looking for a potential sell setup. Probably to take away this low. Okay, taking away this low or not is not the most important thing, but this low is meant to be taken out. Okay. So even if price goes above this high to take away this high, another sell setup is good to come. Just understand that the fundamental direction and where the higher probability chance is towards the downside for card Swiss. Okay. So if you look at the trend, you also confirm it. So so you don't get caught up. So let's head over to the next one. So now we are with AUD. We now look at AUD New Zealand. So AUD New Zealand was one of the best I traded last week. Personally, I traded the AUD and NZD personally. It was a very good one. So you could see, you even goes to the 1 hour, you could see there are some sort of markings, like they are technical. You can see how far price went go to the upside. If you look at our previous video on the UDNZ, you will see exactly what I explained here. When price was, I think, around this level, I said something, but potentially we could take out this low and then now to the upside. Go there and you will see it exactly, what we discussed in our previous webinar. So you will see, the massive move, how we actually discuss that, explain that. Now you can now gradually understand the importance of fundamental analysis. So when some people tell you fundamentals is difficult, it's not important, you tell them, no, 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 no. It is important. Okay, it's just like driving your car and your shield glass in front of you is just blocked. You cannot see where you are going to or something that is coming to hit you. Just imagine that. Okay, I always give this simple example. Technicals is just like your side mirror. It shows you the past. Technicals here cannot tell me what is going to happen on the 2nd of March. Okay, where my mouse cursor is currently, or 3rd of March. It cannot. But fundamentals can give me that view. Till price get to that level, that's when I can make a decision technically. So you can see what technicals can show you completely is just the past, just history. Okay, so that is it. So all of them are very important. Fundamentals is very important. Sentiment is very important. Technical as well is very important. Don't think one is more important than the other, or this one is not that important. All of them are important. Okay, so you don't need to say, let me just do only technical and all of that. No, that's why you ask yourself, why is it that we have a large amount of traders who are still not successful in the financial market, especially on the retail side? Okay, and that is why Godo Capital Market here is trying to bridge that gap, giving you these weekly information to be on the right side of the market. So AUDNZD, like I said, we're on AUDNZD. So what do we expect on AUDNZD? So for AUDNZD, price, I think, is a kind of risky at this point to begin to look for a buying setup, because we could potentially get something similar to what happened here. Maybe a corrective structure before another up move again. So buying at this top wouldn't be the ideal thing. The opportunity came last week. So AUDNZD, it could still continue pushing to the upside. That is the fundamental direction. But technically, I don't think it's the best buy at this point in time. Because remember, in the financial markets, you need to buy low and do what? Sell high. Okay, so that is it. So I don't think it's at the best point to begin to buy now on AUD, etc. So the next one we'll have is AUD and USD. So what are institutions doing? Okay, so for AUD USD, as of last week, we are at 10 and currently we are at 7. So a decline, so meaning not in favor of AUD in terms of sentiment. So so that could make me say, okay, I could drop AUD USD regardless of my fundamental bias. It's bullish, but that could make me say, oh no, maybe I can look at other pairs. Which here I have how many pairs? 1, 2, 3. Okay, excluding AUD, so 1, 2, 3, 4, 5, 6, 7. So 7, or even if you have 5 for 3 for the week, 4, and you get positions in that 3 or 4, that is wonderful. Okay, so that's why you can see we have a whole a good number of pairs here. We are looking at for the week based on the opportunities we can see in these pairs. Okay, good. So AUD USD, you can leave it for now. The structure is still in the making, and especially with what sentiments is also showing us. So it may not be the best opportunity. So don't be surprised. You are not in control of the market. This is all about understanding what plays out the more. We can come into next webinar and you see AUD USD is above the moon. Okay, it's highly possible. That's why you need to have a system and you follow it. Okay, and when you follow it, it gives you confidence and removes every atom of fear. You don't care about what happens, whether it was a business opportunity or whatever. Focus on the ones that are giving you opportunity and you make money. Okay, So that is it. And towards the end of this webinar, I'm going to discuss some fundamental tips to remind us again. I did this last webinar, and I'm always going to be mentioning these psychology tips rather. Sorry, not fundamental tips, psychology tips. It's really important for us as traders because some of the habits I'm going to be mentioning, are habits that make traders unsuccessful in the financial market. So the next one on our watch list here is AUD against the Canadian dollar. So what's the next thing? We look at sentiment. Okay, if AUD card is bullish, what is sentiment telling us? So from the last 3 weeks, you can see -5 move to -2.9 and now -2.4. Gradually pushing up in favor of AUD, but still on the negative side. But the change has not been that big. So let's look at AUD card. AUD card is one of the pairs I traded last week. I remember catching the AUD card around this level, AUD card around this level, and this dead around this point. So, but the AUD card as well is also setting up for an opportunity on the AUD card. I wanted to get a corrective structure here, but price didn't give me that on Friday and went to the upside. And that is fine. I already know. So no panic. I know what is happening in the market. That is the important thing. So when you meet an opportunity, you have the knowledge of what happens in the market and why it happens. When you make money, you know the reason, and when you are wrong, you also know the reason. That is what education, real education gives you in the market. It removes every atom of fear and uncertainty. Okay. So for AUD card, if I get any corrective structure, any good corrective structure for AUD card, I'm going to be looking, for up move, taking away this side because this move here could be engineering a whole lot of liquidity. So we could get a corrective structure here. Don't be surprised. Price could potentially push back to the upside again after it was having engineered liquidity. This is wave analysis, but the kind of concept I use helped me to understand not just the mass psychology of market participants, but also to be able to read market makers framework and their footprints. So with that kind of information, for example, technically here, downside, this is a correction and then this down. So I know that this correction is done. This move here is not pushing down to just go low, 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 low. No. Fundamentals is still bullish, but technically here, based on what I know about technical, they have engineered liquidity here. So that is kind of understanding market makers framework. Okay, and some traders will begin to think that okay, here could act as a support, and then we'll go down and they'll just take out their stop loss. The ones who wants to sell, the ones who are already selling or who wants to buy, they will take them out, kind of force breakout. The ones who wants to sell, they will think market wants to push down. Their stop losses are here. It will go back up because they don't understand how waves and structures work and how they happen. So they are going to be kind of liquidity both on the upside and to the downside. So I've discussed for AUD card what we're anticipating. Any corrective structure here, we are still anticipating price to continue pushing to the upside for AUD card. Okay. So the next one on my watch list here is okay, now we are with yen. So we look at NZD JPY. So we move on to sentiments and look at what is NZD JPY giving us. So NZD JPY last week was -3 from a +15, and then currently from -3 we are -27. So that is a very good one in terms of sentiment. So what is NZD JPY doing at the moment? So it has given, first of all, given a very strong to the downside. But here, the kind of move NZD-JPY is giving is, this is a kind of a complex structure. Not everybody is going to understand what is happening here. So, market could give me an opportunity here, but I wouldn't want to confuse you guys. It's still setting up for a sell. What is happening here is a corrective structure. If you are conversant with wave analysis very well, you may be able to understand what is happening here. It's something we call, potentially a double three or a triple three is what is trying to unfold here, and it's going to give us a sell setup. And but if you are not aware of that kind of information, you can focus on other pairs, and they can also give you more opportunity. Because if you look at here, a lot of liquidity seems to be there. Market makers are engineering a lot of liquidity that they could grab and then push back to the downside to also grab, the liquidity below, because they are potentially engineering traders within the range. Okay, so a corrective structure is what is up there. So when it's done, the move is towards the downside for NZD JPY. Okay. So the next one we have here is USD JPY. So a very good one we have been looking at for. So what are institutions doing in terms of USD JPY? Last week was -0 and now -16. So giving us that idea that okay, we could be setting up for a very big move to the downside, and that is what we are expecting. Last week I was expecting a push to the downside on USD JPY. Market didn't do that, just gave correction and continued pushing to the upside. I was wrong and I owned it up, but I was wrong doesn't mean I entered the trade. Okay, because I know what I do wait for, before I can, take a buy or take a sell. So when you are wrong, it could be you are wrong with the direction, not that you click the trade, because I know I look at a whole lot of checklist before I can click the button. Not even just looking at the chart here technically. I look at series of information. For example, before I even click a trade, there's something called footprint chart. I know so many of us may not, know that such information exist in the market, whereby you read in between inside the candles. So that is it. Sorry for that, excuse me. So it's still loading. So we are coming. So once the chart is done, we'll come back here. So for USD JPY here, what are we looking at? Here is an impulse, a correction. We went up. Here seems to be giving us a correction. So for USD JPY, we could see one more drop. Price could move from here, but one more drop is possible, and then upside again. After that, what I'm looking at for USD JPY is a push to the downside. The push to the downside is what I'm looking at for USD JPY. Because if I go to 4-hourly time frame, for example, so 4-hourly time frame, for example, here seems to be a sharp drop, sharp up, sharp down. So any correction here means downside for this down. After that, we'll get an up move for this up, completing this entire structure here, giving us a three-way corrective structure, impulse, correction, and important. Then another down move is potentially going coming. All right. So these are a kind of a forecast, for almost close to the next 2 months. So you can keep an eye on that and see how that unfolds. Okay. So that is for USD JPY. So I said USD JPY is the potential downside. So any pushback up here, probably above this high and this high, look for sell setups to the downside. That is for USD JPY. So the next one we have on our list here is yen and CAD. So we pair that, and that gives us CAD JPY. So we go on our watch list and we look at that. Here, we see CAD here is giving us +12, and now here we are having a -6. So which is telling us that we are declining to the downside. So if we go to the chart right now and look at CAD JPY, and what is CAD JPY doing? Similar structure with USD JPY. That is what we're anticipating on, CAD JPY. So you could already see my marker out there because I'm looking at it for the next week. He has given us impulse correction. With what I told you guys, corrective structures are minimum 3 waves. If you understand wave analysis and how to identify them, you can see before the big next impulse here, you can see 1, 2, 3. So here is not the correction, it is another part of the correction. So correction takes time, all right? It's usually a 3-wave structure. Impulse here. So what am I looking at for here? Potentially, you can see similar thing. We can get a push to the downside, then upside. But what am I looking at for? These are the big movies, and that's the fundamental direction on CAD JPY. So that is the last one we have on our watch list. So before we move on to other things, if anybody has any question. Okay. Somebody says, sir, please, I can't see the pair. Sorry, which of the pair? Which of the pair, or is it just the pairs? You mean the list of the pairs? That is from Akachukwu Dominic. Please, Dominic, you can unmute yourself.
Okay, you can unmute and ask your question.
Akachukwu Dominic, is he here? Okay,
Yes, sir.
Okay, good. Okay,
Good
go
evening, sir.
on. Good evening, brother.
Sir, please, those pairs I could not get like the pairs you showed us you told us what you're expecting to see in this coming week. So I didn't get all the list of those pairs.
Okay, I will just list them, but also, to uh tell you as well, this what we are doing here, this webinar is being recorded. You can always also rewatch, on our YouTube channel at Godo Africa. The link can be shared on the chat box here on Zoom, so you can see Godo Africa. So just type
Uh,
Godo Africa. These are the previous webinars we have been doing, so you can always visit, and rewatch our previous videos, okay? But let
uh,
me do that quickly. So the first one here, I said NZD Swiss, USD Swiss, CAD Swiss, AUD NZD, AUD USD, AUD CAD, NZD JPY, USD JPY, and CAD JPY. These are pairs on our watch list. Okay.
Evangelist,
So, yeah, we were able to do that based on fundamental analysis. What are the three best performing currencies? These are the measures against the three worst performing currencies. So we pair them. That is how we do that. Okay. So, please, Dr. Lu, you can also share the link to our Telegram channel on the chat box, because we also do drop important informations there as well. So when the scorecard changes during the week, I often update that. Yeah, we also have upload daily market updates from our broker. So you can always, it's very, very helpful. So you guys will indulge everybody to join the group. So it's very, very helpful. So Dr. Luke, please, you can drop the link to our Telegram channel on the group, so they can also join and have access to those information there. So any other question? Before we move on to the last part of the webinar, which is geopolitics. So we have looked at economic data, looked at fundamental and macro, looked at technical, and now the next one is geopolitics. Okay, I was trying to show you guys something, what I call the footprint chart. So you could see it's not just you trading technically on the chart, but when price gets at some levels where I'm looking at, I try to analyze inside the candles, try to identify institutional activity and spot on at that point in time when I would buy. This is what we call order flow analysis. So many of you may not have that level of information and knowledge, but so you could see, from what you are doing and what other professional traders are doing is totally what's different. So it's now late for you to say, okay, I need to work hard, I need to study hard, because you can now see there's a whole big knowledge gap why maybe you are not successful in the financial market. All right. So that's why you need to be visiting this webinar more often. Join those group, and there are other information that are shared there. And there are some of the information you see here. Some places where you pay hundreds of thousands of naira, you may not even get a quarter of it. Okay, so that is what Godo Capital Market is bringing for us here. So anybody has any question before I go over to geopolitics? Any question, please? You can ask your questions, guys, before I head over to geopolitics. Okay, seems no question. Okay, so I'm going to be heading over to geopolitics. And one of those stories, like I said, is the story of the Middle East. For now, that is what we are going to be discussing in terms of the politics because that is what I think that's what the market is actually focusing on. Last week, I think towards Friday and today, that was Friday, when the Supreme Court in America struck out the Trump tariff. I think the market didn't react much because I don't think the market is actually focusing on that. I think the market is more focusing on the Middle East tension between Iran and United States and possibly Israel probably going to join in terms of if there's any escalation. So I think that's what the market is focusing on. During their last talks in Geneva last week Tuesday, Iranian foreign minister came out and said they have made progress, on how they are going to continue their discussion. And the American counterparts, Steve Witkoff and Kushner are saying is their strategy. Iran just want to waste time and all of that. Okay, so our job here is just to analyze, the political, the geopolitics here and look for trading opportunities. We are not trying to put emotions or anything. Our job is just to analyze the geopolitical tension and then take tradable opportunities there. So, what am I trying to say? With the comments, especially the second comment coming from the American side in the negotiation, saying they don't think the Iranians are serious with negotiation because the red lines Donald Trump gave them in terms of the range of their ballistic missiles, reduce it to 300 kilometers, remove their nuclear, stop their nuclear enrichment, dilute it, and stop the protests of allegedly killing protesters. They should also stop it. I don't think the Iranian side is even considering to all of that. All right. So, and towards I think towards the end of last 2 weeks, even Trump ordered the second USS aircraft carrier, USS Gerald Ford, after Abraham Lincoln is already stationed, in the Middle East waters, I think around the Arabian Sea now, very close to the Persian, the Iranian waters, but not close to the Strait of Hormuz. Okay, so we can see that last week, when you go through the news, you also hear, a partial closure of the Strait of Hormuz by Iranian Navy, them performing military drills, in cooperation with Russia, naval forces and Chinese naval forces. China giving them, satellite intelligence about the position of U.S. aircraft carrier and all of that. So China is trying to produce their interest because they buy cheap oil from Iran. So with this, an escalation is possible, and when you are reading reports, it's now all about timing. When is it going to be? The last time I shared an image between Trump and Netanyahu, their dress code. Sometimes communications are not given in words. You can even read it in dress codes. If you're a good geopolitical analyst, you can be able to do that. Even in terms of monetary policy, when the central bank governor wants to come out and give a speech, sometimes they don't even say it openly, say we are going to cut rates. When they don't say it in terms of giving you some clues in words, you can even see it in their body language, how they move, their dress codes. Okay, one of the first time I decoded in terms of monetary policy was when I saw Jerome Powell. Even regardless, he was blunt, straight to the point. It was time, to change interest rate path. That was last year, but he was putting on a red tie. That was a whole lot of things. So the information was direct that they are going to cut rates as of then. So this is the major geopolitical news right now. The Iranian and US tension. That is what I want you guys to keep an eye on. So you can see Trump aides urge him to focus on voters' worries, not war with Iran. So it tells you where his focus is. His issue with Iran, and his aides are telling him to focus. Okay, so you could see that is the major thing happening in terms of the Pentagon, where their priority lies So it's always good to focus on this. And aside from that, one of those instruments that could be affected is crude oil as well. So one of the websites where you can get good market updates on crude oil is okay. Benjamin says he has a question. Okay, just okay. Ask your question before I continue, please, Benjamin.
All right, thank you, sir. Sorry, when you opened the platform for the general question, my device started giving network issues, so it booted me off. So my question is so on I saw this on X about 2 days ago,
Yeah,
and okay, not on X, on a certain YouTube channel, and then the person said something like, all these people where they talk say they made 500% on a $40 account. They took $40 to 1,000. They took $50 to 5,000. And the person was mentioning all of those stuff, and he made a reference. And with that reference, he was trying to compare what um, hedge fund traders, large account traders or people who manage accounts, uh, the kind of returns they make, and he was saying 1%, 2%, 0 point something percent in, I think, maybe in months or year at the end of a trading year. So,
yeah.
that got me thinking. What are your thoughts about that? Is it impossible, or does it take some stroke of luck for someone to actually make such percent, like 500% on a $40 account, or is that just professional? Is it just professionally right that you should just stick to 0 point something percent or 1 point something percent as a professional, just like the hedge fund, or as a trader, just like the hedge fund trader does, or just as they do? Or what is there? Would you think there's a certain percentage that's good enough for someone to make, or there's a certain percentage that's impossible for someone to make?
Okay. Well, to start with, anything is possible in the financial markets. All right. There's no amount anybody cannot make in the financial market. One of the popular histories or events in financial market is what's his name again? George Soros, who broke the Bank of England. So
Yeah,
things can happen in the markets, but on the long run, what you are looking at, can you rinse and repeat this particular thing? Okay. Uh, if you are using the concept of luck, that's no longer trading. That's now gamble.
yeah,
Okay? Because trading has to go on with data. You can see the process we are going through here with data,
yes, sir.
with
Yeah,
everything. So somebody who is following the right approach, I don't think should be able to begin to do a whole lot of crazy things. All right. So somebody can maybe want to play with $40. Maybe in his other account, he has maybe $100,000 in
yeah,
that account, and just decide to play with 40. Okay. Maybe when you are looking at it, just how you are looking for it, like it's as if the person is taking maybe excessive risk, but maybe he has a big chunk of capital just behind, just maybe
yes,
trying to maybe flip some kind of amount of money. So it depends on the context. Sometimes when you see all these things on social media, you don't get full details of what the person is actually doing. It's just that's why I don't take everything I see on social media just that way. Because when we call
yeah,
it's media, it's something that is probably edited, maybe video edition. You just think of watching content. That may not be people's actual life. Okay. You can be watching a movie and someone is acting like a madman. Not the way a mad, but that doesn't mean the person is mad. You understand? So
true.
everything you see on the social media, you take it with a pinch of salt. That's just what I would say. But if somebody is risking $40, your account is $40, and that is all you have in terms of your capital, and you are risking $40, and I don't think that is sensible enough for anybody or trader to do. But maybe that trader who is doing that may have, like I said, $10,000 or $100,000, in his wallet, and then decide to play around with $40. That is
Yeah.
definitely fine enough, for example.
All right. Thank you, sir. Thank you so much, sir. Thank
You're welcome. So any other question? Okay, good. So I was trying to talk about oil because oil is one of the. Anyone want to say something?
Yes, sir. So I have a question.
Okay, good. Go on, Dominic.
It's about the there's this chart you showed us. I have been seeing that particular chart online, and I've been trying to get the chart, this price action chart.
Which one? Which one, please? Hello, Dominic.
Maybe he's talking about the footprint.
Oh, okay, okay. Go on with your question.
I said the price action chart. There's this
You
price
mean this
action
one?
chart. No, yes, this one.
Okay.
Because I've been trying to get to find any let's say any site I can get this price action chart, because I know that between the like it have been like just 2 years and now that I've been trading, and within that 2 years and few months, I've noticed that
Yes.
most big traders and even big banks, this is what they normally use. They don't normally use this the chart that is regular, like all these trading view and others. They don't normally use it. They
Yeah.
normally use price action chart. And I've been trying to get it, but I don't know any where I can get access to this price action chart.
Okay. They actually not for free. There are different sources. You pay for it probably, monthly. Some charge you $20, $40, even up to $100, depending on the large chunk of information you are looking for. Maybe if not only for footprint chart, if you are looking for other fluid tools like market profile and volume profile. For example, me, I studied how some of these things are developed. For volume profile, I don't pay for it. I use the one on TradingView. I kind of manipulate it, the way it is on the futures market to still generate that same kind of information. Okay, you can see my volume profile here that gives me, levels of reaction. Market, for example, you could see it's not a coincidence that price came to this high volume, this point of control here, and reacted, regardless of is a three-wave structure here, correction and then reacted. You could see. So it's something I've like kind of studied and few years back and see how it works. So there is a whole lot of them. And maybe some of them you need to purchase data. They are professionals, and it's not something that maybe we can arrange a class that if you want me to talk about other flow analysis, I can talk about it. So this video doesn't, so that this video is not going to be too long. But if I'm discussing that, that's going to take a lot of time. Okay, but like I said, anything you want us to discuss further, or maybe make a video on this, I said the same thing last week. Please put it on the YouTube comment section. I want you guys to comment there. That will show me the level of seriousness you guys have. Okay, so leave it on the comment section on the YouTube channel, please. Thank you.
Okay, sir. Thank you so much, sir.
You're welcome, brother. So any other question? Okay. With crude oil, like I said, crude oil is one of the instruments that is most likely going to be affected so much uh, with the US-Iran tension. And you could see it's almost everywhere. And remember, I told you something. When you go to different news websites and you see something written boldly, it tells you that the market is paying you the attention on that particular thing. You see, Iran, and there's something we call NLP, those who are into tech, what we call natural language processor. This is a form of maybe artificial intelligence trying to try to understand what is most likely going to happen in words. Okay, maybe if you have a good command of English, you can even understand, try to decode what market is paying attention to when reading. Now, let's just look at what it is here. Trump's aides. So when you say aid, these are important people in this government, and they are urging him. They are urging him. Now, look at the word focus. So when you say, somebody can say, oh boy, focus on your focus. Focus on this thing. But when there is lack of focus, it's a problem. So if his aides are telling him to, focus on something else, and his focus is on another thing, it tells you that okay, for the market to pay attention to this, it means that the focus of Donald Trump is on Iran. So you could see it's telling you, just using the words there tells you, where the market attention is. You also see something written on Iran here as well. US and Iran slide towards conflict as military build up, eclipse talks. So you can see how everything is also written here. And if I go to oilprice.com, US Iran tensions threaten to send oil tanker rates soaring. Okay, not really oil prices, but tanker rates in terms of the ship, the vessels. So when you see the word threaten, so this begins to tell you a whole lot of things that wow, the market seems to be focusing more on these US Iran tensions, and the market is not taking it lightly. It's just like hands are on the trigger in the market. Just because I read a whole lot of articles every single day concerning this, because it's going to move the market a lot. And many of the reports I'm seeing there is, many of the reports I'm seeing here is, the military sides from both counterparts are ready. What they're just waiting for is just a command from the political echelon to tell them, okay, it's time, go and strike. So the market, that's why you could see the market is really telling you, news articles are really telling you that, this is a very big problem. This is something, for you to keep an eye on in the market. So that's part of the geopolitics. What I want us to look at, is the issue of Iran. When you look at the issue of what happened with tariff during last week with the Supreme Court, I don't think the market is paying huge attention to it. When you read through, you can see it being mentioned, more often, but that still doesn't mean it's overly important. Something can outweigh it, which I feel the US Iran tensions is probably going to outweigh whatever tariff and Trump is going with the Supreme Court. So are we there? But with this now, if it's adding a global tariff 15% from 10%, now it's going to be hell when if there is a war between US and Iran and potentially Israel joining the war, because risk assets is going to be, is going to be losing a whole lot of value. We see Bitcoin dumping, all right, because you need to understand what drives asset classes. You see gold pushing to the upside, fear in the market. You will see safe haven currencies like Japanese yen, Swiss franc, and maybe dollar as well, pushing to the upside. Dollar is a safe haven, but in this scenario, it's weak in terms of the data and gradually losing its safe haven status. So, but it has not completely. So these asset classes are going to appreciate. So, geopolitics is another aspect of the financial market you also need to keep an eye on, because when they come, this is what we call market events. They can come and probably override, maybe what you have in your macro, your technicals and everything. They're just events that can just come, boom, they do whatever they want to do. And once that news has died down, the market will continue its trend again. That's why you need to, when we talk of information, knowledge, education, within retail traders, these are some of the things we are talking about. You guys need to begin to, this is a business. Take it serious, okay? And these things are not that difficult. It's only when you pay attention to them and go to them every morning or every day. You can just take 30 minutes of your time in the morning. Go to fundamental articles, read, make it a habit. I'm not saying stay all through the day on this website. You can just take 30 minutes of your time or 1 hour, read through articles, get updated with what is happening around the world. Maybe in the evening you can look at it again, but at least once a day, minimum, and every morning you can be look at it. Okay. So now talking about risk management, let me say a little thing about risk management, then we can go. So in terms of risk management, traders make a whole lot of mistakes, and some of these things I mentioned in our last webinar, and I want to repeat them again till it sticks with us. Okay, sometimes a lot of us think stop loss is risk management. Stop loss is a tool in terms of risk management, and it's important that you trade with stop loss because it protects you. Okay, but when you are talking of only stop loss, and you're not looking at things like the size of your positions, stop loss becomes a very funny thing. So imagine somebody on a $100 account using one standard lot and then using a stop loss. It becomes a very funny thing to do. Okay, so not just stop loss, you also look at your position sizing. And one of those habits a lot of traders do, I see people do that a lot, is adding to a losing position. You don't do that. You can only add to your winning position, because when you are adding to a losing position, you are increasing your risk. You may be having that mindset of, no, I know where it's going to go to. It's going to turn. Told you. Okay. Even if it does, you are not in control of the market. You're only in control of your risk. So it's always good to manage that which you have control of. Okay. And forget about what you don't have control of, which is the market. But you can always control your risk. So never ever add to a losing position. Even if you should add, you should only add to winning position. The another point is some people always do when the market is about to hit their stop loss, they begin to shift it. They begin to shift it. No, you always need to respect your stop loss, because as you are widening your stop loss, you are widening your risk. Okay, and before you know it, boom, you blow your account. Okay, so your stop loss should always be placed in a structural point where you know that, okay, if the market crosses this place, I know I'm wrong, and you accept that you are wrong. Because before entering that, you have already maybe used the position size calculator to calculate the loss size you use based on your account size, and you're okay with the risk. And that is just it. Okay, so another point is don't just jump into the market. Okay, look at with your system, make sure everything is in place. Don't feel too small when you see what other people are doing online, and yeah, it can motivate you. Those things are good, but know when it gradually affects your psychology. So you don't just see because another person, Chukwuemeka is buying good. So now Tunde wants to go and buy gold, and gold starts selling. You say, because you think Chukwuemeka is you need to trust your system, look at what you are doing, follow proper risk management, and then you are good to go. At least that keeps you long enough in the market. So with all these things, proper risk management, knowledge of good risk management, knowledge of fundamental, sentiment, technical, and all of that, it removes fear. So when people say fear psychology, they begin to think maybe it's something they will read only on books and all of that. It's quite funny when you see traders talk about these things. But the real knowledge of the market removes fear in the market. You don't have nothing to fear about. You have nothing to fear about. So proper education removes fear. It removes tension. Because you know what you are doing. You know what you're expecting in the market. So, but even if it doesn't happen, your risk management is there to protect you. So real knowledge and information in the market removes fear. So it's not when it says trading psychology, people begin to tell you things about trading psychology, and it becomes as if it's something that is not achievable. Just understand how the market works, your psychology is fixed. So once you understand that, understand proper risk management, you have nothing to fear again. That issue of psychology goes. It's not something you can learn while reading books. Books can always help. Read. Okay, I read a lot of books. Read books, they can help. But I'm telling you that what is going to remove fear in the market, the fear you have with the market of taking position is knowledge, information. When you have information about everything we've mentioned, the risk management, macroeconomic analysis, fundamentals, technical sentiment, order flow, and all of that, it removes fear in the market. Okay. So that is it. So do we have any question before we go for today? I think we have done and discussed a lot, and I know that everybody enjoyed the session.